last year, over 1.5 billion in Australia was invested into startups in the ecosystem. Oh, that's amazing. What an amazing number. The market's lifting. This is brilliant. Only 34% of that was domestic capital. International investors are betting on Australia. That's great news. But what that also means is that when liquidity is realised, those funds are not recycled here, right? Those funds are recycled in other countries. So we're basically building an incubator of liquidity for other countries.
Pinch Me, I'm Dreaming, episode 7, and I've got a very special guest today. I have, I was gonna like try to come up with a nickname, but then I was like, any nickname that I say is not going to do it justice. I've got the wonderful Carolyn Breeze with me, CEO of Scalare Partners and payments industry.
Queen.
I don't know.
I'll take Queen.
Every woman? Queen? You go with Queen? Okay, well, that was going to be my nickname, was going to call you the Queen of Payments, but I felt like that was just, still a bit cringe.
I'm really, really well.
Carolyn,
and
how
I
you
didn't
doing?
know this was the 7th episode. 7 is my favourite number.
Well, then that means that this is just a turning point in both of our weeks, isn't it? It's going to be smooth sailing from here on in. So we've got Carolyn here today to talk through a whole range of stuff. But to start with, I think it's always a good idea to just do a little bit of like scene setting, a little bit of background, who you are, what it is that you do, what it is that you have done, and most importantly, why. Let's just start at the beginning. What's the Carolyn Breeze story? Who are you,
right
Carolyn
now,
Breeze?
I'm the CEO of the Scalare Partners. So Scalare is a listed company that helps startups scale and invest in them. So we own lots of brands in the market that startups and scale-ups and some of your clients and stuff may recognize. So Tankstream Labs, which is co-working spaces, Tech Ready Women, which is an accelerator program for female founders, Planet Startup, like virtual CFO services, the Australian Technologies Comp, which is a 12-year-old, really well-regarded tech comp, and in-house ventures, just to name a few. And 100% of the profits that we generate across those assets and the platform that pulls them all together, which is the Founders Union, we invest back into Australia's best startups. So the best way to think about it is kind of like a circular economy. But anyway, I've been there now 3.5 years. Feels like 30 years and 3 months at the same time. When you've been in a job and you feel like you don't remember what happened before that, but you also feel like you're learning every day is kind of how I feel in my role. But my background before Scalare was payments for close to 12 years. So I kind of grew up in eBay and then PayPal in the kind of the mid 2000s. So I was exposed to fast growing companies with boots on the ground internationally, which is what Australia was. So being able to experiment and lead go-to-market planning and strategy and sales for these big organizations with big budgets and cool logos and be able to kind of, fast fail and make mistakes and grow. So it was a really, really fun time. And my first kind of pure payments role was I jumped in as head of Australia for Braintree. So Braintree, for those that don't know, was, I guess, the Stripe of its day. So credit card acquiring company based in Chicago. They also owned Venmo. So a lot of people know Venmo, but maybe not Braintree so much anymore. And PayPal acquired Braintree, and the Braintree tech stack became the tech stack of PayPal and the yellow button, and allowed PayPal to do more than just the yellow button and the wallets. Like that's when they got into credit card acquiring. So that was a really wild ride. So sucked back into PayPal, and I was there for a few years. That was a lot of fun. But what I realized I really loved about my roles at eBay and again at PayPal and Braintree was almost being a startup within a large company. So just having that small, really fast, nimble team, moving fast, able to make decisions and basically greenfields, like grow into a market. I really loved that. And I love the pace of that. So I then went and joined GoCardless, who were opening in Australia and New Zealand at that point. So I was first boots on the ground country manager and helped scale that business for close to 3 years. And that was wild because it was also stepping out of credit card acquiring and heading into bank-to-bank payments, which I thought would be like same, but different. But there's actually a lot to learn when you move into account to account. And they were UK based. So I'd been working for, US entities for close to 10 years, and stepping into the world of the UK and Europe was totally new learnings. Scaling that business through partnership distribution channels and direct to small businesses. It was a lot of fun. And then you know how in your career you have these moments like half the time the career is leading you, like people are presenting you with opportunities or putting you into rooms and the kind your career is going that way. And for me, it's been very rare that I've been leading the career. Like it's been very hard to step back retrospectively and go, what is it that I'm really enjoying and what do I want to do more of and what do I want to be challenged by and learn? Like I feel like I've been that combination of right place, right time, right attitude. Um, and so from GoCardless, I did have the opportunity to really think about what I loved. And if I look back at eBay, PayPal, Braintree, and then GoCardless, this democratization of something quite complex and making it accessible by businesses of all different shapes and sizes, I worked out was what was really appealing to me and kind of aligned with my values. So if I look back at eBay, in one day, I could be sitting on a crate in someone's garage having a cup of tea, and he and his wife sell fishing hooks, and they make enough for their family selling fishing hooks.
Mm-hmm.
And then that afternoon, I'd be in the boardroom of Appliances Online trying to convince their e-commerce team to give me their new line of fridges as opposed to the grey stock that they, like it was just this weird. But at the end of the day, the secret herbs and spices of eBay meant that mom and pop business could sell to the same clients globally that someone like Appliances Online could, as long as they did the right thing by the customer. And so I loved that. And then going into Braintree as well, like at the time that PayPal acquired Braintree, one of the biggest clients they had was Uber. And Braintree with Uber created that frictionless payment experience, that Uber-esque payment experience, where you didn't even have to push a button to check out. It was all about tokenization, closed loop tokenization in the background. And then taking that internationally, like I often, to make it really hit home how complex that is, in the payments world, I think you get it, but outside of that, not so much. But being able to fly to like Singapore, hop off the plane, open your Uber app, and be able to hail down a car and have all the payment information recognized and tokenized and being able to kind of settle in country, like that's complex. And they were able to do that at a global
Mm.
scale, but also Braintree then made those tools and that same Uber-esque frictionless payment experience available to all sorts of retailers of all shapes and sizes, right? So I loved being able to democratize in that way and allowed non-Ubers, access to that same technology. And then GoCardless was similar. So the problem they were solving is not unlike a big part of what Pinch solves for businesses today, and that's the pain of just getting paid. Like, I know it sounds so rudimentary, and I think a lot of us take it for granted, but there are literally hundreds of thousands of small businesses out there in Australia who have to spend time chasing money to get paid for work they've already done, and it just blows my mind, right?
Yep.
And so Go Cardless back then was basically saying, hey, for you, Mr. Window Cleaner or Jim's Mowing franchise, for you to go and get a direct debit account from your bank, you're going to have to put your house on the line, right? You've got to go through all these payment compliance pieces, and you've got to manage payments like a PayFac. That's impossible. So I loved that Go Cardless were making that available to small to medium business. And so that's kind of where I guess the momentum of me moving my career forward kind of began. And then I met the team at Zepto, fell in love with that business. They were one of the first in Australia. They were the first payments company actually to become a connected institution to the MPP, which is the real-time payment network. So just think, account to account on roids. And I loved that. And I love what it could do for, again, businesses of all shapes and sizes. So not waiting to get paid 3 days and not having all these payments decline, but being able to do things in real time. And one of the biggest opportunities I saw in that moment was that we were kind of moving down this gig economy route and this pay by consumption route. And that there were, again, Uber's a good example, but it's only because I knew the payment system so well, is those Uber drivers would wait like a week to get their payment out, right? but every day they needed to spend cash, they need to buy petrol, they need to feed their families. They might want to pull down on their Uber wage, multiple times a day or multiple times a week. And the payout mechanisms in place just weren't in touch with real time and the gig economy. And so yeah, I loved my time at Zepto too. And then that came to an end, and you know, of all the companies I work with, I then, it's obviously the tech that is the enabler that allows this democratization of technology and making it accessible. And I kind of had my eyes widened to, well, that's happening in all sorts of sectors, right? And so maybe those skills are transferable for you. And so I then started to look at other tech companies and then joined Scalare, knowing that, with my background in commercial go-to-market and my passion for democratizing tech, I've got the ability to help lots of companies scale and grow and to get across lots of businesses. So that's how I got here.
This was episode 7 of PMID. That was Carolyn. I'm just kidding. I'm just kidding. So I while you were talking, there was 5 jump off points that I could have jumped into there, but I suppose we'll just start at the very end there, because that's a monumental career. Obviously, congratulations. That's an amazing CV, and I'm sure you've been at the forefront of a great deal of disruption and innovation that's occurred in the payments industry over the last decade. And I love that you keep bringing up this idea of democratization of technology. I love how you mentioned that, sort of opened your eyes to how that must be happening in other fields right now. So I gotta ask,
Yeah.
AI. I almost feel like if I just said the word AI, you're just going to start
Jamming.
stream of consciousing things. But are there any particular applications of AI out there that interest you? Is there any what about in the context of Scalare,
Yeah.
the Founders Union? What's your vision for where this whole AI movement is going to take us? Are you an accelerationist? Do you think it's going to be the end of it all? Talk me through just your high level perspective on
There's
it.
so many angles I could take with this. And I think one way to kind of answer the question methodically would be to talk about, I guess, my exposure and how it's grown. The fact that we have, hundreds of startups come to Scalare Partners every year looking for funding means we've been really fortunate to see the trajectory of AI and how it's played out in these companies. Kind of started with companies using AI to streamline efficiencies and operations in their businesses to be able to accelerate their own growth faster and go to market faster. So getting rid of those binary kind of tasks and helping with things like research and, I guess, testing go-to-market assumptions and testing commercial assumptions. And then it kind of pivoted into a lot of companies, including some that have made changes to their business in this time, going, hang on, I actually think my business, the core business that I have, has an opportunity within AI in the vertical that I'm in, right? So there's an example in our portfolio of a company called Jettle. It's for high school students and teachers. If you think about when it was first incorporated, it was around almost like a marketplace for students to be able to upload their work and get feedback and mentoring so that they could, produce better outcomes at school. And it gave teachers and tutors another way of income. And then it ended up moving into the school stream. I think it was about 18 months ago they launched Jedi, where they now actually have the curriculum in the system. So they're live mapping to the curriculum and giving all this feedback and, using AI in schools for good. But if you think about it, that was Jettle saying, hey, this could actually be a differentiator for us. So not only do we use it internally to accelerate, but it's now a differentiator. And then the other part of that is the medtech, biotech, ag tech sectors probably get me most excited, because the accelerated learning possibilities for those organizations and research labs and things that are, people that are solving real problems solve cancer, right? Or just real world problems. These agents are being used to accelerate research that would have taken months or years. And I think that's probably the most exciting thing that I'm seeing now come through Scalare. And then if we go back to kind of the payments theme, I mean, that's just crazy to me, is that a lot of what agents are doing now, what AI is doing now in payments is basically what the cloud did for banking, right? So there's a lot of companies out there building AI companies and building ways to start a new business or create a website or build a product yourself, vibe code your way to a business. And payments are just becoming a part of that, right? It's almost like these AI companies, the frictionless payment component is almost like a built-in component. They're now competing versus the payment companies competing. I know I probably haven't explained that well, but it's like it's taking embedded payments and embedded finance to like a whole new level. Um, and I know that, sometimes if I see something really cool, I'll flick it to you and share it with you. But even just thinking about onboarding into a payments company or onboarding as a client or an end customer and just seeing some of the tech that's coming out there around automation for onboarding and KYC and AML, and it's just crazy. And then the last thing I'll say about AI and payments, because it's like it's crucial, but it's also really fun, is fraud, right? So fraudsters are using AI faster than we can keep up. We're only going to be able to combat that with AI. And so I think I get really excited when I see regtechs and, fraud platforms coming out of this kind of AI native piece where they're just pulling together data and staying on top of what's happening in the market and feeding that back in real time to payment facilitators and banks.
Do you think that AI is a
Yeah,
good
I
thing?
do. I know what you're about to say. This comes up all the time. I don't know. I think so.
Do I?
I get
Do
asked
you?
a
What
lot when
was I
I'm on
about to say,
panels and
Carolyn?
stuff like, but what about people's jobs? Are people going to lose their jobs, right? Because of AI? And yeah, I think some people will lose the job to be done because of AI, but that doesn't mean there won't be other jobs to be done. And I heard an interesting
Mm.
train of thought today from a VC fund. A partner at a VC fund was kind of giving the overview of what they're seeing in their market. And they said it's interesting, like the SaaS platforms and the AI driven SaaS, I mean, it's almost the same thing now, but the AI platforms, when they're sitting in front of financial stakeholders and decision makers within their client, they're no longer just asking for the SaaS or IT budget. They're now being able to help forecast the impact that would have on a people budget, which is interesting.
Mm. Yeah, I have a particular vision for like one of the ways that I see AI in payments disrupting things. And it goes a little something like this. So at the moment, the card schemes are trying to work out how to do agentic payments in a way where essentially, they know that the agent that's making the purchase online, right? Say it's just your ChatGPT agent, to just make a really simple case there. You've given your ChatGPT agent your credit card details and said, "Hey, go and buy me,
Yep.
some boots." Right. The problem is that at the point of the checkout, how does the checkout, like how does the actual like payment rail itself know that they have authorization to actually use that card, right? Once they solve that problem, which they ostensibly have, like theoretically have, it's not been fully rolled out into the universe yet, but I believe it might have even been one of the companies you worked for that actually did the first agentic payment transaction not so long ago. I think what's going to happen is essentially that people are going to outsource the management of their
100%.
entire budget, whether it's household budget or business budget, to agents. Because if you think about like how we make purchase decisions generally, just as consumers, we're very like manipulable,
We're
right? Like
emotive.
as a
We're
person, we
emotive.
buy things
Yeah.
based. We're emotive, right? Yeah, and the concept of like buyer's remorse, the concept of like not being good with money and all of that, it kind of goes away if you outsource it to this like galaxy brain thing that has the parameters set when you're at your best, right? Like imagine you're setting the parameters of this buying agent at your best. You're like, well, I'll plug it into open banking so you know what my income is. You can instantly see what sort of stuff that I buy that I shouldn't. Okay, you can't lie to AI, right? I only want to like spend this much money. I want to save this much money. This is my taste. This is my ethical perspectives. These are my moral values and stuff like that. If you use AI enough, it already knows that stuff about you, by the way. So you don't even really need to explain it to it, right? I think that when you think about the implications of outsourcing all of your purchase behavior, even if you just think about it in the context of a household or just an individual's budget, the sheer amount of disruption that causes, like it essentially destroys
industry.
the entire concept of trying.
Yeah.
Yeah,
Yeah.
exactly. Exactly.
Yeah.
It's like goodbye. It does, right? It essentially makes it so that if I'm a product company, my job is no longer to try to convince you to buy from me. It's to convince the agent.
Inside your
What is
skill.
convincing?
It's to get inside your shopping skill.
Yeah,
That is it, right?
it's to do answer engine optimization, right? It's to do answer engine optimization. I started as an SEO, so I've been trying to outgame Google my entire career. So like I've been thinking about SEO the entire time, and very quickly my philosophy about SEO became ultimately Google's mandate is they're trying to give people the results that are most relevant, right? So like the best way to win the game of SEO is just to be the best result. And to be the best result means having the best company with the best customer service and the best product and the best reviews and the best reputation and stuff like that. I've always had that mentality. It's like good SEO is just being a good business and knowing how to say it out loud. In the world of AI, it's just that compressed down to the exact. Like that's literally what it is. You go ask ChatGPT for an advice on what to buy in a certain topic, it's just going to aggregate all of the endpoints and give you exactly the correct answer. And you just got to keep teasing out more and more options. It's not that different to SEO, except for the fact that now there's the possibility that you don't have to even search and go to a website and read some information and click. You can literally just go to the AI and just be like,
that now?
Like, all of that.
I don't know when
That's
was the last time
crazy
you booked a little family holiday, but aren't we doing that already? Yeah, like I think
It's a valid point.
I'm a huge fan of assisted living, by the way. I think that's definitely the way of the future. I don't want to be worrying about what's in the fridge and what's running out. I don't want to be worrying about when the insurance is being renewed and whether I'm still on the best deal or not. I don't want to be doing any of that stuff. And so I'm all for it. I think there's probably two huge business opportunities in there. One is how someone becomes discoverable in that world. So there still has to be a way that you can market to Carolyn and she can be able to feed you into her agent, right? As something that she likes, that she saw, something she saw on someone or an experience she heard about, a restaurant that got mentioned to her, right? There must be a way to be able to, there's something in that. How do you then become the conduit of discovery, right? There's a whole business in that. And then I think the other one is, the more we trust the agent and the automation, the more assisted living we kind of go down. It'd be great to also say to it, so you touched on it before when you said like how much you want to save. Like there are companies out there now, startups talking about this. It's further than that. So I'm XYZ years old, but by the time I retire, I want to have this much in my savings. I want to have a property that a house that I live in that I've paid for. I want to have stocks, and these are the things that I care about. And it's almost like an agent that's a wealth management system. It almost game the system to get the desired outcome. Like I don't need to know the path there. All I can tell you is how much of my salary you can contribute and what I want the end game to be. You just have to get me.
I could sit and talk about this all day, but and I've thought about this a lot, and my mind pretty quickly goes to like, if it's that easy, does it defeat the purpose? You know what I mean? Like once you as a human, you get to the point where like something is like the chase is no longer there, like the adventure's taken out of it. Like, do you even value it anymore? And like, I think that there's a pretty strong argument to be made that like the internet is sort of automating itself to a point where it becomes irrelevant to human experience, and we just go back to just being physical beings completely. But anyway, enough of that. Let's talk about something else briefly. The budget. You work for Scalare Partners. I don't know whether you've quite explained the whole Scalare Partners thing enough yet. So start by just going into a little bit more detail about what Scalare Partners actually does, what the mission and the vision and the objective is there for Scalare, not the Founders Union, for Scalare. And then I want you to comment on how you feel about this CGT discount removal thing, the whole like argument that we keep seeing on LinkedIn and accounting Facebook groups about how they're disincentivizing startups. I want to know how you feel about that too.
Yeah,
But
so
start with the Scalare
Scalare
thing
at its
first, please.
core, like if we don't talk about the other brands, Scalare as at its core is a self-perpetuating investment model whereby the services provided to the startup and innovation ecosystem are what we know founders need to be successful in those first 5 to 10 years. And the profits we then use to invest in the best tech that we see come through those channels. So if you were an investor in Scalare, which you can be because we're listed, you would assume that because of the reach we have in the market and the amount of founders that we work with through all of our assets, we have the pick of the bunch, right? We see the best of the best. And so it's a very de-risked investment model. So that's probably the Scalare part of the piece. But if I think about so I'm really passionate about this topic and I feel like you did some stalking to bait me to get me to talk about it.
Is it stalking if like
Yeah.
your stuff just pops up in my LinkedIn
Yeah.
feed while I'm minding
Okay.
my own business?
So it is one more blow to a cog in our ecosystem, which already is dysfunctional. So if you think about startup nodes around the world, it's too hard to compare us to full countries, right? Just because of size and population, right? But if you try and compare us to nodes, which I think is fairer. So so I'm talking Silicon Valley, Balangaroo, Tel Aviv, New York, London nodes. And you think about what it takes to drive a successful startup ecosystem. There's lots of components that go into that, but there's probably 5 that are fundamental when you look at those other markets that they do really, really, really well. And those 5, what's that?
Coffee.
Coffee, yeah. Oh,
Coffee.
I would argue India has coffee. But anyway, but they basically those things create this liquidity cycle, right? Which then starts to kind of grow and expand. So if you think about markets that do really well in the innovation sector, they have a lot of capital and they have a lot of IP and operators recycling in the same right ecosystem. We don't. So the things that work really well, if you compare all of those markets, is proximity. So being able to work in spaces together, which is what makes those nodes so effective, and the collaboration within those spaces when it comes to government, industry bodies, corporate universities, and startup incubators, right? That collaboration of those together. The second one is really well-trodden international pathways that are well supported by your government and industry for growth. So trade agreements, right? Tax exemptions, people being able to get visas easily, right? And travel and people having a reason to come back home. Those well-trodden paths we're really bad at. If you think about those other countries I mentioned, India, US, no-brainer. Tel Aviv, like New York, right? It's a well-trodden path. The US, the globe, right? Well-trodden path. London, US, well-trodden path. We haven't worked that out really, right? We haven't had any trade agreements or anything meaningful in place for long enough to even know what that path should look like. The other thing is those countries, by and large, invest in their own innovation sector. So I might get some numbers wrong here, but I'll do my very best. Last year, I think it was over 1.5 billion in Australia was invested into startups in the ecosystem. And that was in the Cut Through Ventures report. Everyone was like, oh, that's amazing. What an amazing number. The market's lifting. This is brilliant. Only 34% of that was domestic capital. Now, the pro of that is, oh, well, international investors are, they're betting on Australia. That's great news. That is great news. We always need that. But what that also means is that when liquidity is realized, those funds are not recycled here, right? Those funds are recycled in other countries. So we're basically building an incubator of liquidity for other countries, right? If you compare us to the other nodes that I mentioned, over 60 to 70% on average in those other nodes is domestic funding, right? Yeah. The other issue is our super funds and pension, like our super fund, like 4.33 trillion last year as of June, punches well above its weight compared to any of the pension and super funds I mentioned in any of those countries. We in Australia invest less than 0.5% from our superannuation funds into local innovation and tech. Those other countries do 5 to 7%, and in most of them, it's mandated, right? And then there's mandated, and then there's
Mandated?
startups first, or as in mandated that the super funds and pension funds do that.
Invest in, when you say startup, sorry to interrupt you, Carolyn, when you say startup in that context, like, do you mean any new business, or are you referring specifically to new businesses in specific sectors, or are you referring specifically to technology businesses?
Technology businesses. Yeah, technology.
Wow.
Then you think about tax. And if you look at any of those nodes that I mentioned to you and the way their tax is structured around supporting early stage tech companies and early stage companies more broadly, it is way more favorable than our domestic market. And again, on exit. And that's why we keep seeing these founders leave, right? They get to their Series A, their lead investor comes from the US, or their Series B, and they're out of here. And you know what we lose? We don't just lose the liquidity, we lose all the talent. We lose the operator talent and the IP. They very rarely come back. So in Australia, less than 12% of technology startups are founded by repeat founders. In all of those other nodes I mentioned, it's more than 40%.
Is not a part of it, though, that when they scale to a certain size in Australia, they need to move to a larger market and they just feel more comfortable, like, in a larger market with feet on the ground there? Or do you think it's all because of the tax laws?
Place and we were investing in our own tech and supporting our own tech, they would be able to do that and have boots on the ground without having to re-domicile.
What would that look like? Like, when you say the right trade agreements, what does that, like, practically look like? What are we actually missing here? What would it look? I guess the question is, what would it look like if it was working?
There needs to be
Yeah.
some tax exemptions and government support, firstly, around keeping operators in the country. So making liquidity a thing that's acceptable and reasonable to do here. Because I think if we cut through all the chaff that we've seen around CGT this week, right? And I haven't even got to that bit yet. I haven't even got to my point yet. But if we...
I mean, it's important that you do this part, though, because, like, I think that without the actual, like, preamble, you know, people would, you know, not really understand why you feel that way about it.
Without the preamble, it's hard to understand what a nail in the coffin it is. And I think, not to kind of digress, but if this goes through, I don't know if you remember, but about 18 months ago, they were looking at how they tax unrealized gains in super funds. Send most of us broke.
I remember.
They decided to enforce that. And it also doesn't make logical sense because, as you know, startup valuations can evolve over time. My fear with this component is, what else does it lend itself to next time they do a reform? There are other... Once we start allowing these types of changes to impact the innovation sector, it's impossible to reverse. And so I worry that it affects other things down the track.
The idea of, like, mandating the superannuation funds to invest in technology startups feels like it'd be a popular thing to suggest. Do you have any idea why that's not happening here? Like, is it the governments of Australia just lack the vision?
Yeah, I just don't know if left hand's talking to right hand. And it's interesting. I can't confirm this, as in I haven't seen a plane ticket, but I know this from multiple sources to be true, that a couple of months ago, I presented this data at South Start in Adelaide and had an overwhelming response online and in person around just these facts being pulled together deliberately. And then I kind of ended the presentation with the good news, which is, if we get this right, this is the material effect we can have on GDP and exports. And while that week was on at South Start, there was a group of superannuation CEOs being taken on a roadshow in Silicon Valley with VCs. I don't think we don't do a good enough job of supporting our own local tech. We also, our government and our corporates, our Australian corporates, less than 13% of our tech startups have them as a first client. And again, in other markets, it's over 30%. It doesn't matter how you look at it. We just don't eat our own dog food. We just don't.
I feel like part of the problem is that the Australian economy, you know, especially when it comes to industry and productivity, it centers around two things. One being the resource sector, right? big money and all of the lobbyists and all of the the interest even in the narrative that gets told about the Australian economy all centers around what we're doing with the stuff
100%.
we dig out of the ground. But to me, the other part of it
Yeah.
is the property market, right? Like I feel like that there was obviously a rising sentiment that having so much of Australia's like mum and dad investment, or even just professional investment in what is an unproductive asset in the form of a home that's literally just growing its value without
Yes.
doing anything really at all. Not even talking about the impact that that's having on young people trying to get into homes and things like that. Like, because that's not what this podcast's about. You can listen to one of my other podcasts if you want to talk about that. But the impact that has is that, like, what might otherwise be, productive investment or people thinking about starting businesses with that wealth that they've created through their careers ends up in something that's functionally useless for everybody except for the investor and the bank that they're mortgaging it through. So I guess, like, for me, I'm hopeful that the pushback that we're seeing from the accounting industry and the startup sector and stuff like that causes the government to reconsider at least potentially like walking back the CGT on startups and the CGT on shares component of the reform, because the other aspect of it, eliminating the CGT discount on the gains that get made from property, to me, kind of makes sense. What do you feel like in that
So
respect? Do
for
you
that,
do you
not
think
so
that's a
much.
fair statement?
I think when the news of the reform first came out, my first and kind of only lens on it ever since has been the effect that it would have on the startup ecosystem. Now, that's not to say that there are other areas where that type of reform could be beneficial for the economy, but I think it would be detrimental to the startup ecosystem.
I see it as an opportunity to transition wealth from one to the other. That they instead of using that as that opportunity, like if they incentivized investors to be like, you know what, it's no longer a gravy train here. Now it's time to start some businesses. That would have been a great thing for them to do. Next subject I'm going to ask you is: have you considered running for politics? Because, like, obviously there's a vision problem here. No, I'm just kidding. I'm not going to make you answer that question. I want to ask you about another thing that's a little bit in the bureaucracy layer. I know we got really into the bureaucracy layer, but it's the surcharge thing, with the RBA announcing that they're banning card surcharges. Most of the coverage has been about whether it's good for consumers, and I think most people feel like, yeah, sure, at face value. But nobody's really asking what it's doing to small business, service providers, fintech ecosystem, etc. Is there a conversation people are missing? Like, how do you feel about that? Surely you have some nuanced perspective on this.
I think all it's done is shuffle the cards, like shit flows downhill, right? So someone's got to pick that up and someone's going to suffer from it. And at the end of the day, once the dust settles and we end up in a steady state again, the consumer is still going to be paying the same amount. Oh,
Jacob Aldridge came on PMID and made a really interesting point. He said to me, he's like, I think all this will trigger is as soon as small businesses realize that they have to just increase their prices, they're going to increase their prices by even more than the surcharge amount. So it's actually going to be a net detriment to the consumer.
Which doesn't get talked about, I think, a lot, is that it's taken that choice away from the consumer to choose the payment mechanic based on whatever loyalty card they have or their Qantas frequent flyer points, or whether it's the kid's debit card or whatever it may be. They've taken that choice away. So on principle, I get it. But, I'm a points girl. Like, I don't mind paying a surcharge if I know, I can push for an upgrade next time I'm flying. So it depends on the client. At the end of the day, the pricing is going to end up the same for the end consumer. It's just caused 12 months of card shuffling for the rest of the ecosystem to work it through. And, even when we capped surcharging, I can't even remember what year we capped surcharging. But, again, it depends on how you want to manage your own money and how you want to pay. And I feel like it's taken it a little bit out of the hands of the consumer. So I feel like it's disguised as an improvement for the consumer. But if I think about what I used to get loyalty point wise 10 years ago versus today, like, keep the surcharging.
I
Oh,
have a conspiracy theory. My conspiracy theory is that this is secretly all designed to accelerate the adoption
A2,
of A2A
A2
payments
at
at the point
point
of
of
sale.
sale. It's one way to do it. I mean, the
Do you think
RBA have
so?
been stomping up and down and smacking people for 2 years and nothing's happened.
You're like the first person who's agreed with me. I keep
I
telling people
I
this,
don't
and they're
think
just
it
like,
would be
"Come
I
on,
don't think they'd have
man."
enough, I think for the backlash that they'd get from the schemes and the like, let's not forget how all these people make money.
But you know
Yeah.
that like MasterCard are massively innovating in A2A themselves. They're building account-to-account technology that sits on top of it. Like as long as
Yeah.
MasterCard and
But I think
Visa
it's 'cause
eat,
really
they won't
smart
have a problem
companies like
with it.
Mastercard saw this coming a long time ago, right? And so
Yeah, yeah, yeah. I mean, they probably got told before
yeah, so
everybody
that's a
else that the
risk in their
banks wanted
world.
to
They've
do
got to
it, right?
think, well, in a world where there's no surcharging or surcharging continues to be compressed, right? Which is not their home market, the US, but think of other markets. How would we compete? And it needs to be in other
Mm,
ways. And so I think they were just ahead of the curve. Um, but yeah,
mm,
yeah. I mean, it would be
mm.
interesting. There's lots of companies out there innovating, doing a great job at how we make account to account payments more relevant in, point of sale and in other parts of our worlds. Even like e-commerce is still tokenized credit cards, right? So I do think there's a huge opportunity there, and I do think they'll be the winners out of this for sure. And so they should. They've kind of been working really hard at this for a long time. But do I think the consumer's better off? Not really.
No, not unless the RBA decide to, cap the account-to-account payment at like way cheap or something. Because at the moment, it's still like,
Yeah. Yeah,
expensive
just
enough.
have to
So
make your shopping cart bigger.
I think that's
Maybe we
been
can put that into
largely
our
the reason.
shopping skill and say, if the cart is under $147, add something to it so that my account to account payment is less than I would have paid on a surcharge.
Do you want we're exclusive announcement? Like we're going to be doing a partner summit. Fiserv, Clover, Pinch Payments, Mastercard are all involved. We're going to be doing this later
Yeah.
on in the year. Do you want to come talk? Because I feel like that we should have that conversation in front of people and exclusively for about 45 minutes. Let's move on to the next segment. This segment's a little bit of fun, okay? So Michaela's put together, shout out to Michaela, she's on holiday. Michaela's put together a list of rapid fire questions. So I ask you a question and you just answer in like 1-2 sentences, rapid fire, and I'll move on to the next one. You ready? Do your best. If it's terrible, we'll edit it out. It's totally fine. Just kidding. If it's terrible, I'll turn it into clips and shame you publicly. I'm just kidding. I'll edit it out. First question. What is the biggest lie founders tell themselves?
Biggest lie founders tell themselves: that they need venture capital to be successful.
Ooh, I like it. Next one. One sentence. What do VCs actually invest in? The idea or the person?
I can't speak for all VCs, but the person.
Always? Next question. Name one thing Australian business culture does better than Silicon Valley.
I'm really sorry. I'm struggling to think. Oh, actually, that's not true. Australian founders and Aussie business owners have had to do a lot more with a lot less for a very, very long time. Resourcefulness. We are savvy mofos.
Is that why you think so many good Australian entrepreneurs and founders go over to America and kill it?
And you know what? American VCs love us for that reason. If they can build the business if they can build their business in that market to that on the smell of an oily rag, imagine what they can do over here.
Yeah. That's really interesting insight because there are a lot of successful Australian entrepreneurs over in America. What's one thing we refuse to fix? Yeah, what's one thing the Australian business culture refuses to fix?
I mean, I think if I just stay on my bandwagon at the moment, because I think when I get sick of saying it, someone might finally hear it. And I think that we haven't fixed how we scale businesses and deploy capital for growth here. Yeah.
Asia or North America?
Oh, it's hard without context.
Generally, where do you see Australia's economic future being part of? Do you see us being part of the Western economy or part of the emerging APAC economy more so? Yeah. If you were a founder and everything else was equal,
I'd go for Asia if I was a founder.
What would you choose? Me too. 3 words that describe a founder who will definitely succeed.
I'm laughing because I once called the best founders cockroaches on stage and I never lived it down. But what I was trying to say was, those they'll be the last thing alive on the planet. Like that's just relentless, persistent.
Yeah.
Okay, but 3 words. Yep.
Relentless, persistent.
Oh,
you only got one more.
And Oh, and subject matter experts. I love meeting founders. I know it's 3 words in one, but I love meeting
No,
founders who
that's
have
fair.
come
That's fun.
from an industry, worked in an industry for a problem, aren't technical even maybe, and have gone, "I'm gonna solve this."
Yeah, it's interesting, isn't it? Because like I've been talking to a lot of founders lately, working with Tech Ready Women, for example, and doing a lot of other stuff in the Founders Union, and just generally because I just embedded in the startup community. And you see a lot of early stage founders. They're like, they're looking for validation, right? And that seems to be the guidance, the wisdom. It's like good to go find people who will validate your concept and stuff like that. But paradoxically, I'm pretty sure most of the most successful
Yeah.
founders ignored almost everyone.
Pretty much. Yeah.
You know what I mean? Like I feel like if you like look at the really successful ones,
Yeah.
right? Like the really successful ones, like and you said, how many people's advice did you take? It'd be like, well, I took the advice of like that one mentor that just really believed in me, but everybody else's advice was crap and I threw it all away. Like, or, I took the advice of my first clients, right? My first 100
Yeah.
clients. Like that's very different than taking the advice of just random people. What's 3 words that will describe the founder that will definitely fail?
Arrogant. What's the opposite of curious? Whatever that is. Yeah. Naive,
Naive,
arrogant, and lazy.
lazy. Yeah, that's fair enough. Yeah, I think that an arrogant, naive, lazy person would very much struggle to become a successful anything, really, right? Final question of the rapid fire segment. Great segment, Michaela. I loved it. Your unpopular opinion about the Australian startup ecosystem.
My
Go.
one unpopular opinion.
Unpopular. Caveat, you saying that the Australian startup ecosystem is not well supported by the Australian government
Yeah, that
is a
doesn't
popular
count, does it?
opinion.
That doesn't
count. What's an unpopular opinion?
I would like to see more celebration for companies around growth, number of employees, bootstrapping their business. So we're very good at celebrating such and such raises $15 million in a Series A, which all that really means is they just gave 2 slices of their pizza away. That's all that means. It doesn't actually, that's not success, but that's what we celebrate.
Reminds me of a startup success story that happened not so long ago. It's bootstrapped from the ground up. A couple of payments engineers built this company and got acquired by a Fortune 500 company not so long ago.
Celebrate that.
Let's celebrate that, huh? Let's celebrate.
Brilliant.
Let's celebrate that. I'm talking of course about pinch payments, payments technology by real people. All right. I've got you. How much longer do I have you? Because you're a working mom. You've been with me for 49 minutes. How much longer are you going to?
Okay.
All right. Well, let's wrap this up then. I want to finish on the Founders Union and the Pinch Payments Partnership. So, I'll spend 30 seconds explaining. So basically, what happened that connected Carolyn to us was weird. I think Carolyn would agree it was kind of odd. At the time, we were kind of looking for ways to, expand distribution of the pinch payments product. We're trying to find new markets to go after and stuff like that. And we've been playing around with this idea of going after Stripe and offering like a local alternative to Stripe to be, the developer's friend, the startup's friend, and actually like bet ourselves in that industry. And I was like, you know what, this is a great idea. I'm totally going to do it. And I'm going to invest half of the 2026 marketing budget in it. Oh no, I'm going to have to come up with an entire strategy and a program. Talk us through what happened next.
I came to you with the strategy and the program and took all your money.
But yeah, I mean, it was weirdly fated. It was, and it was such a cool first conversation. But would you want to just tell everyone what we've done so far and what we're going to be doing?
I think we're super fortunate, but the Founders Union is basically the platform that Scalare built so that founders, the 25,000 founders in our ecosystem and whoever wants to join, it's free, could be matched with the right technology providers, investors, service providers based on where they are in their stage of growth and whatever challenges they're facing in their business. Like we recognize that being a founder is really hard yakka. There's a lot of noise out there. What events should you go to? What dev agency should you use? Is that a good lawyer or a bad lawyer? Like, how do you navigate your way through and find the right bits and pieces? And what this platform does is takes all the noise out of that and very clearly matches you and partners like Pinch with founders that need their specific products and services. And so one thing that I'd identified was founders by default rely, non-technical in particular, on their devs and engineers to usually very quickly incorporate their first payment mechanic when they get their first customer. And most of the market knows one brand starting with S, right? But that doesn't mean that that's the right payment partner. And I know that because I've come from payments. So I'm like, there are so many other ways to do this and better ways to do this. But the founder ecosystem just don't know it, right? They don't know there's better ways to do this, that there's better partners that are more supportive out there to do this. And so I said to you, why don't we educate the market together? And you went, yeah. You went, yeah.
And that we're doing.
Yeah.
And here we are right now doing it. And we're going to be doing some amazing things. We've already done some stuff. We sponsored cohort 1 of the Tech Women program. We're sponsoring the Australian Technologies competition, which is coming up. And keep your ears and eyes peeled for a very exciting hackathon that we're going to be announcing in the not too distant future. Cash prize. Interesting challenge. It's going to be a lot of fun. Carolyn, it was a pleasure to have you on. I wish we had more time. Thanks for giving me your time, though. It was very much appreciated. And enjoy your board meeting.
Thanks for having me. It was a blast. Cheers.
Cheers. Bye.